Hey traders, Raghee here, and in today's free video we're going to go over a very simple tool that you can pull up on darn near any platform that I know of. We're going to talk a little bit about what this tool can do on days like today, meaning when we see shifts, massive swings from say the first half of the day to the second half of the day. We had a distinct bearishness for probably 3/4 of the day that was then met with some overwhelming bullishness. And one of the most difficult parts of trading, aside, think about it, price and volatility, direction, right? And then you throw timing in there too. And I think the timing element is something we can leave for another video, but the bottom line is if you can get direction right, if you know what side of sentiment you want your entry to be on, that's going to take away some of the most difficult trades, most painful trades where you're basically swimming upstream. You want to be moving with price. And oftentimes, today is such a great example of the power of this tool that I'm going to show you right now. And we've used volume weighted average price in the room. That's what this particular indicator is, the volume weighted average price, standard deviation and maximum permissible deviation. And then you have the average line in the middle here in this whitish color. I call that the sentiment line. And you'll notice that throughout the bulk of today, in fact, let's squeeze in a lot of data here. And this is a 1-minute chart. I prefer to use these on a 1-minute chart. And you'll notice that, I know this is really squeezed in, but look how we've been below this line for most of the day. And here's the way that I'll recommend doing it. And a lot of you that are familiar with the work that I do with this tool will probably see the similarities. There's no difference in the process. It's just understanding if you're on the bullish side of sentiment, which would be above this line, or the bearish. And this essentially then becomes what? It becomes support and resistance. So when the market opens, I think it's a really good habit to drop some lines on the chart. And the lines and the times that I need you all to keep in mind are the 9:30 open to the end of the clearing, which is 10 a.m. Eastern. And then you go to 11:30, where I would suggest that most day traders really start to wind down their activity and not persist with the same kind of, push, the same kind of activity into what's known as a lunchtime doldrums between 11:30 and 1:30 Eastern. Okay, so I would say, yeah, make that a no trade zone. I would also recommend at least the first, say, 10 to 20 minutes after the bell rings, about 9:30 to about 9:50, make that another no trade zone, or at least be very cautious. Now, notice that during the clearing, and we can expand this just a bit, the market did poke up above the volume weighted average price. In fact, that was the first time in 9 or 9.5 hours that we had. During the Asian session, we were below this line. Throughout the European and the UK opens, we were below this line. In the Asian session, we were below that line. So when I say this is the first time we popped up above it, it is. It is not the time to go long. In fact, what we're looking for is the market to get above this and then retest. And that would be the buy. But since that is not what happened, notice what happened. We dipped down below the line and we retested the resistance. That's a short, right? And then we stayed below. So same thing here. I would continue to short the different retests, right? Now, at 11:30, where we have the cutoff, we want to actually stop trading. If you have a current trade, just manage it, but you actually want to stop trading at 11:30. And I can't emphasize enough how important it is to slow down the activity between 11:30 and 1:30. Now, one tool that I'm leaving out, because that would just be a different conversation, just to start with sentiment here, is the expected price movement range. I will look to projected highs and lows to basically dovetail with that middle line or that sentiment line. So some of you might ask, well, Raghee, what happens when we pop up above? How do we prevent sort of these false breakouts that can oftentimes occur? And this is what we teach. The only way that we will buy or short is once we get on one side or the other of this line, we have to retest, right? So we get above and we have to retest. And you'll notice every entry that I'm talking about here are retesting entries. As long as the market fails on the retest, we're going to stay with the sentiment that was, right? Fails in the retest, stay with the sentiment that was. Now, when the market does take off like it did into the afternoon, remember, today was a massive swing. Dow, S&P, NASDAQ, major swings. Look at how important it would be to understand what side of the volume weighted average price we are, just to pick direction. And again, and you might ask, well, Raghee, how do you know in this situation that we've exceeded what's an allowable amount of price movement through here? And this is what I'll say, the expected price movement does help a lot. We'll talk about the EPMRs in the premium video, and that's a staple in our morning chat when we're doing a lot of day trading. And this is what this is all about, gang. How do you trade a 1-minute chart? How do you stay nimble in this environment? And I'll tell you what, that's going to be kind of the mantra for the next probably few weeks at least. You know, how do you stay nimble when the market can be giving you so many short signals earlier in the morning and be so bearish, and yet the last hour, really the last 40-45 minutes of the day, do a absolute about face. Start with the sentiment, know which side you're on, and then build your trades from there. And I'll see you in the next update.